Taking a look at the closing markets on this Friday, and we've had an interesting week, especially in the grains, quite a bit of volatility. Starting the daily market summary with Maree Johnson of agmarket.net. And what do we see going on in the grains for this Friday?
Sure. Coming off a really strong week, we did see corn lose a little bit of steam, traded both sides today. September contract finished unchanged on the day at 464, with December down a quarter penny, 487 and a quarter. Going to the soybeans, had another good day. We were up double digits at some points. August contract finished up 9 and a quarter, 1246 and 3/4 was the last trade with a 1248 settle. November was up 8 3/4, 1253 and a half settle. Wheat had a big range today. We were up strong at one point. We were down 30 at one point. News out of Russia, Ukraine finished down 13 cents in the Kansas contract, 17 cents in the Chicago contract. Just a wild week with a lot going on.
And when we look at those factors impacting the grains, we'll start off with what you just mentioned there, the Russia-Ukraine war, really putting a bottleneck on those wheat prices. And that's usually causing everything else to go up along with it, especially when there's such big moves, right?
Correct. So when you've got wheat rallying 30 cents at a time, it's really hard for corn to ignore that. They're competitive feed grains. Russia, Ukraine, as far as the world wheat market is concerned, they export a huge percentage of their crop. So when we start to talk about not being able to get that grain out to the rest of the world, it does become a concern. So what has happened and what's happened before in this conflict, this morning we had some headlines that Russia and Ukraine were working towards some type of agreement to allow for safe passage of commercial shipping vessels out of ports, whether it's having, set hours that ports are going to operate that'll be protected from strikes, or, as long as ships notify the ports that they're coming in, they'll have some type of protection. We've seen these types of agreements before in this conflict, so it wasn't wholly unexpected, but it definitely took the wind out of the sails of this wheat market. Nothing official yet, though. Headed into a weekend, anything could happen. Sunday night, who knows?
And then as we look at the rest of the grains with the corn and soybeans, especially in that weather market right now, of course, here in central Iowa, we've seen quite a bit of rain recently, but other parts of the state, you look at western Iowa and then just states west of here as well, been pretty dry, and those weather concerns are impacting the prices a little bit. How is that weather market looking right now?
Sure. So the forecasts this morning, the two models that we look at the most, and I think the trade probably looks at the most, the GFS and the Euro, not in great agreement about what we're going to see in terms of moisture over the next 7 days. We do know that we're going to see the temperatures come back up, especially in the Western Corn Belt. The Dakotas, Nebraska, Western Iowa stand a really good chance of printing actual temperatures in the triple digits over the weekend. We're going to warm back up in my area of Eastern Iowa, but we're not going to be quite that hot. Moisture looks limited. So it's definitely something that the market is taking notice of and having discussions around, especially as we're still kind of in that pollination window for this corn crop that had a little bit of a wider planting window. What kind of impact is that having on yield at this point? And then we're on the doorstep. Really, next week is the last week of July. We're headed into August, critical time for soybean yield. These beans are going to need, at least one more good rain. Around my area, they look phenomenal, but they're going to need to see some precipitation in August to really get the good pod fill.
And then over on the livestock side of things, Maree, how have the cattle and hogs traded today?
Sure. So cattle also traded both sides. Feeder cattle, we finished the August contract up $1.55, settled at $345.32. Going to the live cattle, that August contract was up $167, finished at $227.07. And then our August hogs finished up 70 cents at $102.85. So a little bit of green on the board.
And then when we look at that marketplace, it's been pretty interesting recently because the cattle prices have been so high. And we talked for the longest time about whether or not consumer demand would shift over to the pork. Seems like it finally has. And that's been pretty interesting to see here recently because that demand is ticking up for the pork, and it's having an impact.
Yeah, there may be a component there where the consumer has finally said something has to give with these high beef prices, and I'm going to shift to a pork-based protein diet. We wondered if that would happen eventually. I think, this summer, we've certainly had higher fuel prices with the conflict in Iran. That's also contributing to the stress that's on the consumer's pocket. Seasonally, this is also a time of year that sometimes we see the cattle market take a breather. We kind of reached peak grilling season there over the 4th of July. We're sliding into back to school time now. So it's not unusual for the cattle market to take a step back, but this has been a pretty big step over the last few weeks.
All right, Maree, lots of great information today. For anybody who would like to get in touch for more information from agmarket.net, how can they do that?
Absolutely. You can find any of our brokers at agmarket.net, or you can reach out to me directly at 641-638-6090.
All right, Maree, thanks again for the time as always, and we'll talk again soon.
Thank you.